Traders from around the world, welcome to your Wednesday, April 17th real life stock review. I am back from Greece, got back late last night, and got the first time to check out the markets really in depth was today. There will be no stock review on Friday, however, because the U.S. stock market is closed because of Good Friday. So I will be back on Monday. But between now and then, feel free to check out this review as many times as you need to. Didn't get any requests for today, but I do have some stocks we can look at. In regards to the SPY, the Newsome travel indicator did not fire, apparently. Even though I was traveling internationally, we did not get any kind of crazy bearish movement out there in the market. In fact, we just kept climbing higher. And that's because of the gap that occurred on the 1st of April. Just such a magnificently megalithic strong gap overall on the weekly, monthly, and daily. All three. Huge gap, good close. Everything about April 1st was just too strong. So even me traveling didn't bring the market down. So at this particular point, the fact that we gapped up today and immediately sold off is kind of an interesting thing. We got 3 pennies away from a perfect shaved top candle. So my thoughts as of now, with this being technically a bullish gap and go today and immediately selling off, is if we break or take out the low of today, we actually might finally get a little bit of a soft pullback into some moving averages, something like this. But again, it most likely will be a dip buying opportunity. Realistically, at this particular point in time, folks, keep in mind that we don't have to have and probably won't get a really massive pullback. We could get something that looks like this. We could get something that looks like this, where we just rotate sideways, kind of rest for 2 or 3, 4 months, and then continue higher. Most likely, if we're, again, just kind of judging what happened in the past with what could happen in the future, looking back at the SPY from the last time we bounced off the 200 simple on a weekly was back here in 2016. Right? We bounced, we ran up into resistance. We paused there for a few months, had a little bit of a pullback, made a new high, had another pullback, and then went higher. So could we do something exactly similar to that? And the answer is absolutely. We're at that resistance level now. So with us trading sideways or pulling back, either way, I think we do eventually go higher. And for those who are in some shares of SPY, you probably could be experiencing and being excited about some covered call opportunities up here, as there is some premium for June. Maybe the whole adage sell in May and go away stays true. Going back to some stocks, Qualcomm, check out this beast. So QCOM, although I did not participate in this move, shout outs to Sylvan and Hunglao and a few other traders who did get to take advantage of this analysis that was actually published back on the 28th of February. A very obvious buy low, sell high location, right? You'll notice that Qualcomm traded into the 200 simple moving average on a monthly chart. Buy low, sell high. That's the 3rd time that it came down into that $50 price range. Dividend paying stock. I mean, look at this on a weekly chart. Look at this. This trade was so amazing. So you come down to 50 down here in September, and you bounce up to 68. You come down to 50 again in April 2018, bounces and trades again. Comes all the way back down in February and does it again. Even though, yes, there was some news out there with Apple that helped that process happen, that's okay, because that was and still is a beautiful channel, gorgeous bounce. And today, with that massive bullish candle that came in yesterday, the gap up today makes sense, and it also makes sense that a little bit of selling did come in on Qualcomm, because everyone who was going to get in got in yesterday, and they were selling to lock in some profits today. So overall on Qualcomm, it does look a little dip buyable to me. Disney, tons of people asking about Disney, and this is a stock that actually did a lot of analysis back on this day, March 22nd, with this very specific setup, talking about a bull put spread along with a 109.12, 107.05 entry on Disney. Disney, ticker symbol DIS. Disney, I think Robert Falconium said he wanted to buy Disney off of the 100 simple, which got very close. 107.39 is the 100 simple moving average on the weekly, and the low of today was 107.51. So Disney getting close to a level and some kind of interesting volume down here. I wouldn't be mortified to go bullish on Disney, although I kind of prefer bullish to neutral. So what I'm going to do is, well, we can just do it now, actually. Let me look for a May bull put spread, like really far away, just to see if there's any money there. May 195. That might be it for me. 100, we could get vertical 67 cents for. Best case scenario. Yeah. That just might happen. This is a stock that we've been looking at for the past few years. Obviously, Disney, a very popular stock to check out. And even my good buddy and nephew, Derek Newsom, was talking about Disney not too long ago with Marvel coming out and was excited about that stock going higher with some of those new movies coming out. And it did, in fact, absolutely crush higher with an amazing gap on Friday of last week. This is just a tremendous gap on Disney, going from $109 a share to $131 a share in the last 3-4 weeks. So check out this analysis on Disney. Let me show you back over here. This is one that I've been planning for a while to break out. Disney on the verge of magic for the bulls. This was back in September of 2018 when Disney was around $113 a share. And we're really just planning this triangle. So you can see this triangle here drawn in blue. The beginning of that triangle was about a 90 to 120. So that's $30 move. So this breakout, I've been planning for that move to continue about $30, which is going to lead us to about $140 a share. And it does look like we are getting closer and closer to that mark. So Disney, as far as retesting this gap, ladies and gentlemen, very well could at some point. But here's the thing to consider. This is a breakout of a 3-year, maybe a little bit longer than 3-year distribution phase where all we did was trade sideways for a long time, and then it broke out on a non-earnings gap. It was a gap and go, and I personally think this is the beginning of the beginning for Disney to continue higher with a nice consolidation, gorgeous breakout. Congratulations to everyone who bought low, sold high, or maybe you're still in this position, maybe you're still in Disney. Either way, a gorgeous move, and as far as this gap filling, it certainly could happen, and if it does, there'll be a dip buying opportunity, but right now, I think Disney just looks bullish, and I would stay long for a while. Here's the Qs. The Qs making a new all-time high today, 187.93, the highest that it's ever been. Getting above the highs of these October candles is a massive, massive deal. This is about the time that a bunch of newbies are going to start buying, thinking, oh, this is the highest we've ever been. This should be a good spot to buy. Well, the problem is we've been going pretty much straight up since Christmas. At this juncture, I would not specifically be a buyer on the Qs. I would be waiting for a dip buying opportunity, but very similar to the last few dips we've had, which is January and then over here in mid-March and late March. Both of those were buying opportunities, and every time I've been pulling up the stock review, I've been mentioning buy the dip, the trend is bullish. Same instance, I just simply wouldn't be buying right here. That doesn't mean that you have to be going short, although you can. That is a counter trend trade, and I do think it could go up a little bit higher before we go lower. But based on today's candle and based on the gap immediately fading, if we start making any lower lows, I would be keeping an eye out for an actual small retracement to happen. And then again, another dip buying opportunity. TLRY, got a lot of people asking me about this one recently, and TLRY is going to continue to go lower. Here's my most recent analysis on this one back on December of 2018, where I said TLRY is coming lower. at 75.42, mentioning I wanted to buy puts, but the implied volatility was high. Overall, though, TLRY is coming lower to at least fill the gap, and I pointed to the gap. This is around $45 a share. I mentioned do not be long. Don't be long on TLRY, and that really, it didn't play out obviously the exact day, but it did retrace. We can see here's the curve right here, the retest, and we just slowly continued lower. So at this point, on TLRY, we're getting a little extended for the bears. No question. We did come down to this gap, so we are at that gap that I pointed to, so we're here. So if you're in bearish, this might be a spot to take some gains off the table or at least protect losses. But how low will TLRY go? I do anticipate that it could easily continue a little bit lower, maybe all the way back down below its IPO lows of $19, just to make sure everyone who bought TLRY is nice and trapped, losing money, frustrated, and annoyed. And then it'll probably start bouncing. But right now, I am by no means bullish on TLRY short term, or, well, I say short term. Maybe like over the course of a few days or hours, you could get a little bit of bullish money down here, something like this. But I think at this point, TLRY is just wait for it to go lower if you're looking at buying on a longer term scale. CarMax had an amazing bullish gap and go back on earnings, and shout outs to my good buddy John Salvio up in the New York City area who did play CarMax bullish on this day. And it was just such a nice gap and go that it continued. Really good gap. You can see that it gapped up on earnings, closed above the 200, retested the 200 the very next day, and only continued higher. That was a beautiful S-curve on the hourly chart. Check that out. How gorgeous is that? Boom, boom, boom. Nice S-curve into the moving averages. Good trend on CarMax. And here's the weekly chart. Weekly chart on CarMax did pull into a support, which was, again, around the 200 simple on a weekly chart and just continued higher. So that was a nice move. Good gap, good trend. Everything there on CarMax looks nice. A lot of people asking me about healthcare, and I get it. Healthcare is selling off strongly over the last few days and weeks. So how low is healthcare going to go? What I can say is that XLV, which is the healthcare ETF, is on top of the 100 simple moving average on a weekly chart right now. So can it bounce or will it bounce? Maybe. If you're looking at going long some healthcares, this could be a spot to at least put your pinky toe in and start picking up a share or two. But at this particular point in time, I would say that looking at XLV, it could bounce, but if you're taking a position, make it a little bit of a smaller one, because the last few times we came in contact with the 100 simple on a weekly, we did end up breaking it before we went a little bit lower. The big names like United Health, UNH, broke lower. My buddy Robert Falco in a 190 put sale expiring in May. Right now UNH is at 216.84. So that looks like a kind of a cool spot to be on United Healthcare. Nice looking level. But yeah, UNH, what's this one going to do? You got a really big close last week below the 100. We've retested the 100 simple moving average. You're making lower lows and lower highs. I'm not personally playing UNH. It's a little bit too pricey for my blood, and I don't specifically like the company, although they do print cash like crazy. Yes, this could be a spot to go long on UNH, but I like Robert's put sale a lot better than buying it right now. A 190 put sale for May on UNH makes loads of sense. Buy low, or buy as low as you can on healthcare, and if you're looking at buying around now, just start tiptoeing in, because I could see easily some of these lows continue. But this particular juncture, we'll just keep an eye on this for some day trade opportunities, some good bearish momentum to come out and figure out how it moves from there. Other than that, folks, feel free to throw in your requests, as I will be looking at whatever stocks you want me to check out on Monday of next week. Apple looking amazing, gorgeous close, beautiful move, good candle. This trend is unworldly, otherworldly, amazing move on Apple. She's going to continue higher, so just continue being bullish on that one. And Square, we'll see what Square does. I actually do think Square could go down a little bit lower. We will see, but I'll look to start picking up some shares and start tiptoeing in and adding to some positions around the 69.30 mark. We did get a close below the 200 simple moving average on a daily chart for the first time in a while That happened today. So I'll be watching for Square to do something like this. Don't know if it'll do that or not, but looking at it on the weekly chart, it just seems, well, a little weakly that it could trade down into these levels and then bounce. We will see. But again, 69.34, I'll just start tiptoeing into that price. Obviously looking at selling some puts on Square, and earnings season, folks, is here. Big names right around the corner every day for the next few weeks. We're going to get some huge earnings coming out, some crazy moves, a lot of fun, some amazing option selling opportunities out there, and some amazing day trading opportunities. JP Morgan just putting in absolute work. Netflix doing absolutely nothing. Had a lot of traders sell volatility on Netflix. Chief, his daughter sold some put sales on Netflix at 310. Robert Falco got an Iron Condor on Netflix, which was killer. So many good opportunities out there, folks. Let's keep raging it out. I got Energy Wednesday starting in 30 minutes. Transportation Thursday is going to be tomorrow. Markets are closed on Friday, and I'll be back next Monday with another stock review. And then next week, I will be in Dallas. So if you're in the area, let me know, because I will be doing a meetup in Dallas next week. So until then, love life, live life, trade it. Bye.